Hey, what's up everybody? Welcome back. Today I want to go over a stock and an industry that I explained in detail about 4 months ago, and this stock is MindMed. Guys, look at this chart. This is a mix of a little bit of thinking and pure luck. I was expecting it to rally like this, but not this hard. Not this hard, not this fast. I made my video about this company about 4 months ago, which was around here. Look what happened. Under the radar. While the entire mainstream financial news has been focused on an EV bull run, electric vehicles, and tech stocks, the tech rally, Mind Medicine has been flying under the radar. And guys, correct me if I'm wrong. I'm just assuming that not a lot of people are talking about this. Maybe a bit more are now, but I think still not many people are aware of this. The game plan on how to play a stock like this. Sure, it's a hype stock. Anything that rallies 1,000% in a couple of months is a hype stock. But the thing about this, it is a brand new concept. And when something is so fresh off the boat like this, I can sit here and tell you, oh, the RSI is heavily overextended and so is the MACD. And at any point, we're going to drop down to at least this 20-day moving average, which, is a huge fucking drop. I mean, just to go down to its 20-day moving average, which is pretty normal for any stock to do, it's already a 40% drop. But the thing about this, guys, it is so new and so hyped up at the moment that I think technical analysis, trying to base this stock off technical analysis, is kind of useless at this time. Rule number one, guys, with any stock like this, no matter if you believe it in or not, invest what you're willing to lose. A lot of people with these kind of stocks, a lot of new traders would see this 1,000% return in a couple of months, and then they figure out, wait a minute, if I invest all my net worth or like big chunk of money, I'm going to get like a bigger return in the end. Yes and no. Like if you're going to invest in any hype stocks, I would say only invest maximum 10% of your net worth. Still, if you lose 10% of your net worth, that's going to be a huge kick to the dick. That's why I say maximum. I don't want to say a certain number because everybody's different. Everybody's situation is different. 10% might be 1,000 for somebody, whereas for somebody else, 10% might be $100,000. So it's all relative. That's why I'd rather use percentage to kind of explain to you guys how to position size. The only thing I will say, guys, that I could see happening right now with this stock is this stock coming down to its 20-day moving average before pushing on to all-time highs. But the thing is, this stock is so new, so fresh, that, timing a bounce in this company might not be in your best interest. I'm just saying I could see this happening because it's evident that it happened here. It's evident that it happened here. It doesn't always have to touch the moving average to bounce off it. All it has to do is get close to it for a bounce, because stocks don't move perfectly. We all know this. If this was not a new industry, if this was not a new stock, I would not touch this. But because it is, who's to say that $4.57 is too high for the stock? People right now, with everything that is going on in the world, the global pandemic, increase in mental health problems, and a Biden presidency with a very liberal administration, companies like these are rectifying the mistakes of the past. All these substances were at one time a prescription medication before they were made illegal. And it's about time we start helping vulnerable people instead of locking them up. I can't tell you right now, guys. I wish I could give you some advice on when to get into this stock. This is a stock that you buy and sit on to how many years it takes for you to be in a beautiful position. Time works in its favor. Of course, this is speculation again, but in regards to the stock, guys, I'm like Moon Boy, okay? I'm a delusional Moon Boy. I think really, out of the tips that I mentioned about like getting into the stock, I think the most important thing is position sizing. Dollar cost averaging, that's optional. This uptrend might not stop for a long time. It might stop, it might not. People just want to own the stock. They're looking far, far into the future. I'll show you why, guys. $4.57 is where it's at right now. Let's look at canopy growth in the early days. Now, when was Canopy growth at about $4 here? This mammoth uptrend right here. This looks unsustainable. It doesn't look like it can get any better than this. It looks like you lost the window of opportunity. Time to start looking for the next trade. Look what happens when I scroll to the right. Through all this turmoil, this entire storm, and I keep scrolling. Oh damn, would you look at that? Remember when this huge parabolic move here looked like it couldn't get any better? That might be the same thing that I'm seeing with MindMed. Buying right here might seem like a ludicrous idea, pure FOMO at the time, and any like technical analysis driven trader would tell you that you're insane and you're an idiot for buying at this price here. But if you have the ability to wait, if you bought at the tip top most point here and you used an amount of money that you didn't care about what it was tomorrow or the next day, and honestly, if you lost all of it, you'd still be okay. It wouldn't be that detrimental to you. You have the ability to wait. Yeah, you might drop more than 60%, but if you had the ability to wait year after year after year, this is a period of 653 days. So whatever, that's almost 2 years of waiting. I'm still sure there are some mad gains to be had here, but you need to invest wisely. If you invest more money than you are willing to lose in this company, it's gonna fucking hurt, guys. It's gonna fucking hurt. I'm gonna be real with you. With time, with compound interest, a little bit can go a long way with this stock if it goes in the direction that we are all betting on. If you really care about stability coupled with, making money and not losing all your money, most of your funds should be in a safer, less volatile, preferably dividend paying stocks, and which you could then reinvest your dividends into that company at a discount. Or you could go the ETF route, and the potentially mad returns that you make on hype stock plays like this one can be used to reinvest in your safer dividend paying companies. Then that to me, my friends, is a winning strategy. It's safe. It helps you to sleep at night with much less stressful. So what is the point of stressing out your mind and your body for the hopes of making mad gains, unattainable gains? Because betting all your money on hype stocks is not a sustainable strategy. I hope you found this video valuable. I try and include a wide variety of tips and advice to. Sometimes you just need to get slapped the fuck out of that trance that you're in, It is an honor to do the slapping, my friend. It is an honor. Guys, thank you for watching. Have a great trading week. Peace out.